Hi, and welcome to the Unconditional Videocast, brought to you by realestate.co.nz. This is the summary of the March New Zealand Property Report, an insight into the property market through the month of March, as seen from the website of realestate.co. It's an interesting period this. We are in the last month of what is traditionally the summer season, a usual active time for the property market. And we have seen an expected rise in new listings coming onto the market in March. They rose up just over 12,000 new listings coming on the market. That is up on February. Not surprising, it's a longer month and a very active month, but compared to last year, it's actually down 15%. So we're still seeing a less than buoyant property market. That level of new listing is counterbalanced against a fairly lackluster level of sales. Just over 4,200 sales were transacted in February across New Zealand, so there's quite a disparity there, and the property sales level has been remaining fairly low for a number of months. The net result of that is that the inventory of unsold properties on the market has gone up this month. It was sitting at 49 weeks in February. It's gone up to 53 weeks, so it's broken through that psychological barrier of 52 weeks, a whole year of inventory. So just for clarification, what that means is if the current level of sales that we've seen in the last 3 months, that being December, January and February, were to continue, in theory it would take over a year to clear the existing number of properties that are on the market. Now that's a totally theoretical model, but it's a useful one to gauge what is the inventory on the market in that regard. And 53 weeks is edging towards an all-time high, which was just under 54 weeks, which we saw last year. So we're at that sort of state of the market where there is really a significant amount of property on the market. Now, one would imagine, given that stress and pressure, we might see some movement in asking price. Traditionally, if there's high inventory, you might see some pressure downward on price. Interestingly, this month, for the third consecutive month, we saw asking price expectation actually rise. It rose over $421,000 as the asking price. That itself is just 2% below the all-time peak. So it's interesting that we seem to have, as is demonstrated by a high asking price, a fair degree of confidence in the minds of these vendors coming to market that they don't feel the need to price at a discount or to attract through a lower price than the expected asking price. So quite an interesting mix of indicators there on the market. Looking a little more detail at some of the makeup of those numbers, the first very obvious aspect of it is there really is a two-part industry or marketplace for property. The division is between the provincial areas, that is the areas of rural New Zealand and smaller city New Zealand, as compared to the main metropolitan areas, Auckland, Wellington and Christchurch. Those three areas are more active. They're more active in seeing newer listings coming on the market. Their level of new listings, even compared to last year, is not as low as the 15% nationally. In Auckland, it's only down about 8 or 9%, and in Wellington, year on year is up 4%. The Canterbury market is a market clearly that has gone through quite a lot of turmoil and change through the month of March, but in fact has been for the last 7 months since the September earthquake. And you may be interested, we've put together a separate report on the Canterbury market, which you can watch as a separate videocast on this channel. So have a view of that. But overall, if you're taking those three major centres, the level of inventory is lower than the national average. Their level of new listings is above the level of activity. And equally, their asking price is above the average. Auckland is getting very close at $551 to be close to an all-time peak that we actually saw last year. And there's no doubt the Auckland property market is seeing, in particular areas, quite a bit of strength. It is still showing an inventory above long-term average, but it does appear to see activity coming on those new listings. And that really, I think, is a very key watch to the market. It's almost as if the factor of this inventory that has been on the market and holds on the market for a long time is almost being ignored in some ways, and the market is focused entirely to the new listings, which seem to be finding a market, finding an interest and a buyer, and therefore the asking price can be at what is perceived to be the market rate at the moment, because the median price of property sales and also the more in-depth stratified mean created through the Reserve Bank both indicate that property prices have not been falling of late. they've stabilized and are pretty resilient. So it is a sense that we've got these kind of two parts or almost four parts of the market. You've got an active level in the city areas, less active in the provincial areas, and you've got an activity around new listings, but not so much activity at the clearance of existing stock, which has been sitting on the market for such a long time. So those are the kind of key indicators of where the market is at the moment. It's going to be a key time going into the more quieter traditional autumn period of April, May through June, and to see whether, in fact, the sales activity that we had been anticipating reaching the market, say in February, which didn't eventuate, does come through in March. Those will be key indicators to look for in the month of April. But that concludes this summary of the New Zealand Property Report brought to you on the Unconditional channel by realestate.co. Thank you for joining us. Please join us again, and we'll be providing more insight into the property market through our website. Thank you for joining us today.